I'm Motley Fool Canada Senior Analyst Nick Seipel, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing Shopify's third quarter 2025 earnings and what's behind the stock's reaction. My guest today is Hidden Gems Canada lead advisor Jim Gillies. Jim, thanks for joining me.
Thanks for inviting me, Nick.
So, Shopify just reported their third quarter 2025 earnings results. They surpassed their guidance across the board, yet the stock sold off. Last I checked, down about 4%, middle of the day here on Tuesday, November 4th. What is going on with Shopify today?
Yeah, well, just a basic read through said, boy, this was a great quarter, in my opinion. You had gross merchandise volume, GMV, up 32%. You had revenue, also up 32%. It's gratifying to see as a long term owner of Shopify that didn't really make a lot of cash in the early days. I think going back to 2016 when we bought it, early 2016, now is clocking in at free cash flow margin of 18%. And if anything, these revenue and GMV growth, if you look over the past couple years, quarter to quarter, this is the best performance, frankly, in the last 8 quarters. It's been I thought it was an excellent quarter, just in general. As you mentioned, they surpassed guidance on every front. And there's not much more to say. I mean, their guidance for going forward was also excellent, and they do tend to be like originally guidance for this quarter was I think revenue in the mid 20% range up. Like I said, it came in at 32. They do tend to be a little sandbaggy, I think, if that's even a word. Um, but honestly, it was pretty good. And yeah, I don't see the only reason I can see for selling the stock off is just, it is a richly valued stock. It's about 21 times sales, 22 times sales coming in. I generally hate the sales multiple, but it's what we're going to use for these high growth names. But my take on it is high revenue growth forgives a lot of sins. Okay, and Stock Advisor Canada and the now defunct Pro Canada, we both bought this in Q1 of 2016, I believe, and at about $4 or $5 Canadian per share. And and we've maintained those positions, or at least Stock Advisor has. And the rationale at the time was high valuation, but revenue growth could go on forever and ever, or in investing terms. And and again, high revenue growth forgives a lot of sins. And so for example, if they hit their Q4 guidance, which is I believe for low to mid 20% range. So let's say they do 22%. Okay. If they do 22% revenue growth over Q4 of 2024, the incremental revenue that is produced by that growth rate will be roughly 3 times the trailing 12 months revenue at the time we recommended it in Stock Advisor Canada. And that to me is remarkable. And they're not slowing down. If anything, they're speeding up.
Yeah, Jim, you raise an important point, right? When you see a company come out there, beat expectations really across the board, and the stock trade down, often the answer is the stock market overvalued or potentially the valuation of the stock got a little bit ahead of what the company was able to deliver. But if you look over the long pull of the history of Shopify's presence on the public market, it's been a highly valued company that's been able to continue to exceed the market's expectations year over year, if maybe not every single quarter. So as you think about Shopify today, how are you thinking about the company's valuation from here and its ability to potentially keep raising the bar?
I think the valuation remains rich. We literally said in the original recommendations in Stock Advisor Canada and Pro Canada back in 2016, we said, look, it's going to hit an air pocket at some point. And by the way, it has several times. I think it fell almost 70% from November 2021 through 2022. Um, these things are richly valued, but as I said, revenue growth forgives a lot of sins. So a company like this, it's going to perpetually look rich until the growth slows. And if anything, like I said, growth has been accelerating in recent quarters. So even at 21 times sales, which again, I hate the sales multiple for valuation purposes, but I think it's very illustrative here. you know, this will continue to be richly valued, but as long as they're posting that growth, I think it's warranted. And the one thing that I really appreciate is they are increasingly. There was a little throwaway comment in the press release about global iconic brands taking on more and more. Space in the Shopify universe. And they specifically called it Estee Lauder. But even in my own day-to-day life, like we've seen it move away from the small and medium-sized businesses that we originally were attracted to for the story like 9 years ago. Like my local junior hockey team, their merch sales are all through Shopify. Netflix Canada, last I checked, was using Shopify to do their order taking and what have you. The Globe and Mail, Canada's national newsletter, guess who they use? Again, Shopify. And this is just, intrinsic to Canadians in Ontario. The Ontario online cannabis sales, so it's all regulated by the government. If you don't want to go to one of the 35 pot stores in your local neighborhood, you can order online. Guess who powers that? Of course, it's Shopify. And you can go on and on and on. And that is something that I think is really, really valuable and kind of not really appreciated in the Shopify story even today. It's kind of become the choice of who you're going to go to automate your online sales. It's starting to look to me like Shopify is kind of the first choice and maybe the last choice for a lot of people. So I think that's excellent.
Yeah, Shopify looks like the type of company that can continue to become the default when it comes to online commerce. It's important to remember this is a stock that was up more than 60% coming into this earnings report. So while the stock may be taking a little bit of a tumble post earnings over the long pull, it's been a great performer. And the longer your time horizon is, the less important these quarter to quarter fluctuations become. It's not the 2-day, 2-week, 2-month moves that matter. It's the 2-year, 2-decade moves that really make the big money for you as an investor. That's all the time we have for this edition of the 5-Minute Major. If you want some more stock ideas from us, maybe the next Shopify, you can click the icon in the upper right corner of your screen. Thank you for joining us for this edition of the 5-Minute Major, and we'll see you next time.